Hey guys, what's going on? Welcome to the video. So we continue to see major volatility in the stock market this week, and in this video we'll be going over what played out and what to expect in the week ahead. What are the key levels that need to reclaim for the market to rally, and the key level that needs to break to see continued downside for the broad market. As well as that, we'll be going over some stocks showing notable relative strength, which can be very meaningful as those are the stocks that will often make market leaders once the market does reverse. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, the major pivots that we went over last week were 60.10 to 60.20 as key resistance and upside trigger above, and then 58.60 to 58.80, which had acted as the bottom of the range so far. Monday had a large range move, with a rejection just below that key resistance zone, before a large and violent sell, which broke below that 58.60 to 58.80 zone as well. That zone held as new resistance as it built out a new range between there and 57.20 to 57.45 as support. For the majority of the week, it chopped between those two zones, and then on Friday, it attempted to break down and next leg lower below 57.20. This found support off 56.73 and then was able to reclaim back above that zone, which triggered the false breakdown and rally back up. So into next week, the outlook continues to be that sellers are in control of the trend and expect bounces to get sold until a key pivot zone is reclaimed and held above, which would be 58.60 to 58.80 into next week. 57.20 to 57.45 is a key support, and that must hold in order to keep a larger bounce in play. If it is able to hold, it can see upside to smaller levels above at 57.97 to 58.00, 58.20, 58.30 before that 58.60 to 58.80 zone, which would be the big decision point to either open larger upside or reject if it does get tested. For the bear case, a break back below 57.20 would put immediate downside back in play, which can target Friday's lows at 56.73 and then continue downside below there. The market will be due for a larger bounce soon, which could very well be next week, though there is a ton of uncertainty now, so it's important to be patient and focus only on high quality setups. And taking a look at Bitcoin, last week crypto had a big pump after news that the US will establish a crypto strategic reserve. This led to an upside move back to the key 90,750 to 92,000 zone, which has continued to hold as key resistance after a few breakout attempts above, but failure to reclaim. The same outlook continues for Bitcoin. In order to put upside back in play, it needs a reclaim and hold back above that zone, which was the bottom of the previous 4-month consolidation range. As long as it holds below that zone, there continues to be a risk of a larger sell, and the next major support levels below are at 77,000 and then 72,000 to 73,800. I would not be surprised to see it build out a larger consolidation between these key areas before it gets a more directional move from here. So now taking a look at some individual stock trade ideas, starting out with John Deere, ticker symbol DE. So we went over this stock a few weeks ago as it was breaking out of its more than 4-year-long consolidation base. It followed through on that breakout up to $5.15 per share before pulling back with the market volatility. This led to another backtest of the 447 to 450 zone as new support, which was the top of the previous range and breakout trigger. There was another strong reaction from buyers on this backtest, and the stock showed big strength all week, now back above the 485 level. Stocks that hold up best or go up while the broad market falls are very important to take note of, as these will often be the ones that are leaders and go much higher once the broad market bottoms and reverses. So for Deere, there's a good chance that pullbacks get bought up from here, and holding above 485 can see direct upside back to highs at 515 before new all-time highs above. AST Space Mobile, ticker symbol ASTS, is another high relative strength stock to keep on watch, as it has held up very well during the market volatility. It's potentially setting up for a breakout out of its 7-month-long consolidation, as it held just above the 50-day moving average during the last week's pullback, which had a very strong reaction from buyers there, and as of Friday's close, it is testing the breakout above the 33.6 key resistance level. A break and hold above there can set it up for the next leg higher towards the recent swing high at 35.5, and the levels above there would be at 36.5, then previous highs at 39 before new all-time highs above there. This is more of a speculative growth name, and the fact that it is showing this type of strength during broad market volatility, as smaller caps and speculative names often sell off more than the market during volatility, so the fact that it is showing this type of strength is a big tell, and there's potential for a major future run up here. So that is what I'm watching for in the week ahead. It's a tough market to trade right now, so it's best to be patient and selective until conditions do improve. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading in the week ahead, and I will catch you all next time, and peace out.